Hello, and welcome back to the main stage here at Lending 3.0. So we're going to round out the day with a special fireside chat looking at investments powered by lending. So we have a really great panel here for you to have this discussion. We have Julian Cork from Landbay, which uses lending for buy-to-let mortgages to create an asset for investors. And we also have Antoni Trenchev from Nexo, which uses crypto assets for credit. So I just want to make sure I've described both of your businesses correctly. And as way of an introduction, I wanted to get a bit of a framing from each of you. So Julian, I'm going to start with you. Can you give us sort of a rundown of how your business operates?
Sure, thanks, Liz. So Lambe is a buy-to-let mortgage lending platform. We're in the business of modernising mortgage finance. So we lend UK prime buy-to-let mortgages, and we offer institutional investors direct access to those mortgages through our platform. So borrowers basically pay money on interest on these mortgages into our platform, and our platform passes that interest to our investors. We make money as a business through our platform fees and lending fees, and are primarily an annuity income business, so we're not holding any balance sheet risk. So far we've completed about £650 million worth of mortgages, and we've built all the infrastructure and the technology, the underwriting, the operational capacity to really grow significantly in this market, which is currently sized at about £250 billion. We've also built a very broad funding base with various different institutional investors, ranging from retail banks, investment banks, and also asset managers. And that means we have a strong diversification of funding for our mortgages. So we've got loans funded by securitization capital and also via retail bank deposits into these retail banks. We've got a wide origination capacity as well, and have won a number of awards, including the best buy-to-let lender in the UK for the last 3 years running. And have been named on the Deloitte Fast 50 for the last 3 years as well. And last year, in 2020, we came in as the UK's third fastest growing fintech. Myself, I've been at Lambe since 2015, so I've seen our growth from 10 people and one mortgage to over 100 people and thousands of mortgages. And in my role as COO and board member there, I oversee all the operational aspects of the firm, focusing on our business development, funding, regulation, governance, technology, and very importantly, scale. Prior to being CEO of Landbay, I spent 20 years working in senior roles in JP Morgan and Macquarie Group, various different locations around the world, and also within technology and business roles. So I've really seen kind of fintech from all angles. And fintech is something I personally really love. I'm in addition to being COO at Lambe, also a NED and non-exec director and on the advisory board for a number of successful fintech companies, including historically Bud, which is focused on open banking, and currently Fronted, which is about rent or deposit lending using open banking, which actually formally launched last week. So yeah, really interested in the whole ecosystem here.
Yep. No, I saw the news about Fronted on Twitter days ago. So very interesting company. So I'm going to move on to you, Antonio. Can you give us a framing of your business, how that operates?
Right. Perhaps we want to redo the question and get my name right. It's Antoni rather than Antonio, and then we
No
can
worries.
cut
I will
this
take
out.
that again.
Yeah.
I apologize. I apologize for that.
It's okay.
So why don't we go over to you, Antoni, and give us sort of a framework of how your business operates.
Sure. Well, Nexo is a crypto fintech company, and we offer a plethora of different banking services for the blockchain space. And as quickly everything is coming on chain onto the blockchain space, the definition keeps on broadening. So our two main products are our instant crypto-backed loans, whereby you can take out the loan against your Bitcoin. You have something like 100K worth of Bitcoin, which is exactly 2 Bitcoins with the price action of the past day. You come to us and you get extended an instant credit line for up to $50,000, and you can receive that in 45 different fiat currencies, a bunch of different stable coins. It's a very efficient model in this extended bull run that we had, and we have quite a satisfied customer base who have utilized the ability to borrow against their assets rather than sell it, because they keep on profiting from an ever-increasing credit line, and essentially the deal finances itself. It's also very tax efficient because you don't have to sell it. There's no capital gains tax. Especially interesting in the States, where capital gain taxes go up to 44%, for instance, in New York. So this is what we started off and as a means to finance ourselves, because in difference to what traditional mortgage companies might experience early on, we had a hard time with banking institutions because they weren't very open to the notion of interacting with cryptocurrencies. They were treating them like junk bonds. They wanted 500% of collateral, and then on top of that, they charge you 20% per annum of interest to finance you. So obviously that wasn't an option. So we had to figure out a way ourselves, and this came via the form of our earned interest products, whereby you can earn interest on a variety of different assets, interest on it in kind, whether that is Bitcoin, whether it's a stable coin, whether it's something like the euro. We can pay you up to 12%, depending on the exact terms of the arrangement. And in the low interest environment, this has been a very sought after product. We recently internally launched our exchange product, so we are building everything around the needs of our clients, what we call Nexo 360, which is a suite of services that will gather around every possible need of both institutions and the retail. So, a very hot sector right now, a lot of people coming in, the sector itself exponentially growing. So we're super excited and happy to be here and talk a little bit more about the ins and outs of it.
Excellent. So two very interesting businesses. Thank you. So Julian, I wanted to go back to you. So sort of this idea of packaging up mortgages as an asset for investors kind of smells a bit like pre-2008. So I wanted to get a deeper dive into your business, and why are buy-to-let mortgages a different form of investment for investors?
Okay, so first of all, just this is very different to securitization of mortgages, which the 2008 thing is. However, some of our investors do invest in Lambe mortgages to subsequently securitize. But as I said earlier, Lambe is a buy-to-let mortgage platform. So what we do is we directly match institutional investors' money with those buy-to-let mortgages on a one-to-one basis. Now, the original business model for Landbay was actually peer-to-peer. So we were in the business of kind of democratizing finance by letting individual investors invest directly into discrete parts of many mortgages and have a diversified view of those mortgages and get the returns from those mortgages direct to them as a product for retail directly. And we were one of the first UK regulated platforms, one of the first to launch an ISA wrapper so they could have tax-free investment into that. And we saw the demand continue there. But at the same time, we saw significant demand from institutional capital. As you can imagine, the difference in ticket size between a £1 billion forward flow agreement and a £20,000 ISA is significant. And we took the call to close down our retail arm of the business in December 2019 and focus wholly on the institutional flows. Since exiting the business, we sold the retail loans to a retail bank and returned all funds and provided 100% liquidity to all our ex-retail investors. So I think we've got a great track record on there to get all the money and interest rate back to everyone. And since then, we've really continued to grow with the institutional funding lines. So in 2019, we signed a £1 billion forward flow agreement with an investment bank. In last year, we printed a number of securitizations working with that investment bank, and also put on some further funding agreements both with a retail bank and a fund manager. So we're seeing a huge amount of demand continue in that space. And going back to say what's really different here is this can be really thought about as mortgages as a service, right? So you imagine as an institution, historically, banks and institutional investors who really wanted to deploy funds into mortgages used to really have to build their own capability. You had to build your own origination streams, you had to build your own underwriting, you had to build your own systems in place, you had to build your own brand. But now, with the likes of Landbay and this kind of concept of mortgages as a service, you can quickly implement forward flow agreements with us and work with us to shape the product set that you want. So you leverage our technology, our brand, our capability, our underwriting, etc., and just plug in and then just get the economic benefit of those mortgages directly without needing to go out to get the full market coverage and work with the broker networks and clubs. And you do that at a fraction of the cost. So it really is a kind of new model for banking to enable these people to get these mortgages as a service.
Okay, so then what are some of the next steps here then, Julian?
Well, I think, with the emergence of a whole bunch of new fintechs in this sort of space, and you're seeing a lot more kind of modularization of banking, and both in for retail and institutional customers, people are going to specific firms for specific needs, and I think that's something which is going to continue out there, and a lot more kind of focus on that modular banking. The initial reaction of many kind of incumbent institutions was to try and combat these niche providers who say provided FX capabilities, or in our case, mortgage capabilities, and build their own capabilities. But more and more, we're seeing the reality of greater partnership between institutions and the emergence of kind of banking as a service. So the incumbents are embracing those modular, customer-centric capabilities and becoming aggregators of services. So the incumbents bring their customers or their capital to the party, and the underlying kind of modular firm, which can be plugged in really simply with the technology, brings that customer experience and the capabilities. So right now at Lambe, we're providing these services for all types of institutions and who want to really tap into the UK prime buy-to-let mortgage market today, and the pipeline for new people kind of understanding that as an option and really getting the ROI of doing that versus building it themselves is really working. So I see that these partnerships, are already changing the kind of whole ecosystem, but are going to continue to play more and more of a greater role in this kind of banking as a service modularization of the whole industry.
Interesting. So and Antonio and Antoni, I wanted to move over to you because I know you had a comment on what Julian's just been talking about.
There was a question from the panelists. I'm absolutely sold on the model, Julian. I just wanted to get a sense of the rates that institutions can expect to receive from this matching of borrowers and lenders. What would I, as an institution, be earning through your company and business?
Yeah, so there's it really does depend on the types of mortgages and the level of risk that you're comfortable to take. UK prime buy-to-let mortgage world ranges from 2.95% per annum up to 4.5% in our current product range, and that's because we have ranges for very vanilla mortgages, all the way through to lending to limited companies, all the way through to lending to portfolios and houses of multiple occupancies, et cetera, et cetera. So we have a wide range of different products. And what we provide for the underlying institution is the ability to say, I'm really interested in this segment of the market and I want that segment of the market, but I don't want this segment of the market. And what that gives for them is that return specific to the risk that they're comfortable with. And what it gives to the consumer, the end borrower, is a really wide range of different products because it's aggregated across multiple different funders. And so we see it as a win for both sides of the marketplace, and it's only through the facilitation of a marketplace like Lambe that you can really get that.
Got it. Thanks.
So I'm going to stay with and Antoni now. I mean, I really want to hear this story. So we're going into sort of crypto celebrity territory here now. So Nexo enabled the first crypto-backed mortgage for Brock Pierce. I just wanted you to talk us through that story.
Yeah, well, it's a great story, so really happy to share it with you. We did the first crypto-backed mortgage, even though by definition, it's not exactly a mortgage. What happened was Brock Pierce, an actor most notably known for his role in The Mighty Ducks, for those slightly older amongst us might remember the movie. He has been a crypto bug since forever. He holds a vast majority of his net worth in crypto, and since very early on, so he has done phenomenally well. And at some point, he decided that he wants to diversify his investments into real estate, as any sensible man who's doing well at some point is bound to be thinking about. So he came to us and he said, I have this amount of Bitcoin. I'm looking to buy this amazing property, which I have negotiated in central Amsterdam. It is a beautiful flat, which used to be an illegal Catholic church. So it's underground. It has the altar. It's really, really beautiful building and property. Somehow he convinced the city of Amsterdam to sell it to him. I don't know how that worked out, but he said, rather than selling my Bitcoin, and Bitcoin was trading at around 3,000 at the time, 3,300 something in that vicinity. He said, I believe in the long-term prospects of crypto. I don't want to sell it. Can you extend me a loan? So we devised a deal where we finance him. He deposits something to the tune of $3 million, and then we gave him a credit line for 1.4 million euros deposited directly with the notary in Amsterdam. Then once the transfer of ownership was completed, he got the title to the property. He is now renting it out, probably under COVID, less so, but that was the idea. But either way, with Bitcoin rallying the way it has been just this perfect, cherry picking from both worlds. You have the profit that he's sitting upon from Bitcoin going from 3,000 to 50,000 in less than a year and a half, and all the while he has this amazing property in central Amsterdam, which it's an inflation hedge, it's a diversification, it's great for all sorts of reasons. It's a revenue stream if he can rent it out in a COVID-free world more frequently. And it's just like a deal that has financed itself. We don't charge him anything crazy. I think he pays Nexo something around 8 or 9% a year, so nothing too fanciful, and definitely worth it. And this, as a business case, we have presented it in Fox Business. I talked about it on Bloomberg. This has brought in a stream of other, perhaps less known investors who have essentially done the same. They leveraged the wealth in their crypto to buy anything from houses and properties to, we had a very interesting Twitter thread where a person described his journey to buying a Tesla, which interestingly coincided with Tesla buying Bitcoin. So this has been a very interesting intertwining between different asset classes, different concepts in different worlds, which are all converging into one.
I'm gonna stay with you because I really wanted to get a bit more detail, on how crypto assets kind of service that loan. Because in your answer, you mentioned, specifically Bitcoin has gone from a few thousand or a few pounds 10 years ago is now worth tens of thousands of pounds. How does that? What is the difference between crypto credit and traditional credit? Can you go into a bit more detail on that?
Sure. Well, traditional credit, it has a whole bunch of varieties. You have unsecured credit, where you have a credit score or something like a FICO score in the US, or your Experian or Halifax or whatever the equivalent is in the UK. So you have the credit score upon which lenders make an estimate whether you're creditworthy, and what your conditions would be. This is like what the retail is most familiar with. Obviously, there's mortgages. I'm not going to talk about mortgages with having an expert on mortgages here on the panel, but that's a concept where you essentially borrow to buy a property or borrow against your existing property if you had paid it up in cash. What we are doing is we said we want to build a global enterprise. We want to be active in as many jurisdictions as possible. So it's impossible for us to have an efficient system to service those clients. It's very easy to do credit checks in somebody in the UK or the US, but it's not stuff offensive, but I don't know how you do credit checks in in Kenya or whatever. This is a very, very complicated process, and the way we simplify it is we conduct KYC, know your customer policies, anti-money laundering policies on the client, and apart from that, if he has the collateral to stake, he's creditworthy. We don't care about his FICO score, his experience score, his credit score. So we view this as a very efficient way of giving access to credit to people who might be precluded from obtaining credit under normal circumstances, whether that's geographical, political, or whatever the reason for it might be. And this is very similar to what traditional banking and banks have been offering. It's called a Lombard credit, which is most widely used for commodities, for instance, gold, where you usually you buy a larger amount of gold, and you can borrow against that gold. The gold bars, they have these numbers, and they get secured in a vault, probably somewhere in Switzerland or the city of London, and they extend you a credit line. And they don't care about the price earnings and the EBITDA of your company because they are secured through the asset. You can play around then with the loan to value ratio and how exactly you want to structure this product. But this is what we're all about. It is secured lending. It has been around. So in principle, it's not very different from existing products in the traditional banking and finance sector. It's just that it's an aspect that is not necessarily the day-to-day type of transaction for the retail. And but they are slowly but surely learning of the benefits of it. So we're seeing widespread adoption in the crypto community, but this is spilling over into more traditional minded people and companies as well.
So that kind of gives me a nice segue to go over to Julian to ask him, do you see a day when a crypto-backed mortgage could be part of your portfolio?
Well, yeah, I think from what Antoni was saying, it's a significantly well collateralized loan, and I like the parallel with the Lombard loans and the gold. I think that makes a lot of sense as crypto as a commodity on that. I like the concept of the 100% collateral, but obviously we need to couple that with the title of the underlying property. Obviously being a mortgage, you need to be the legal title holder of the mortgage, and we need to obviously look at the credit score and make sure that KYC and AML were at the level which was comfortable for us as a UK FCA regulated lender in this space. But I love the idea, and it's certainly great collateralization of things as well.
I'm looking forward to finding that Amsterdam mansion on Airbnb someday. So we've got a final question for both of you, because we're getting to the end of our fireside chat, as we're getting to the end of Lending 3.0. So as you know, this event is all about where lending is going, the future of lending, next generation lending. So I wanted to get a feeling from both of you. Do you feel like right at the moment there's a lot of change happening in the lending sector? Have we learned enough lessons from the past? I know I unfortunately mentioned 2008 in one of my questions. Are we moving towards a more sophisticated, a more tailored, better data lending experience. So I wanted to get your views on that. So I'll start with and Antoni first. What do you think? Are you seeing a sea change happening in lending right at the moment?
Well, the fundamentals remain the same. The principle upon which lending is being done, whether that's securitized or unsecuritized, it is the technology, the efficiency, the infrastructure that is changing, and is changing in a dramatic way, up to the point where people who previously had no access to certain products in certain parts of the world are getting that access. And I think that's a net positive for everyone. You know, for us in the western part of the world, it's very easy to dismiss, or why do we need a tokenization of a building and of a Picasso or whatever, because this concept is getting traction. It's really interesting. Why do I need this credit line via crypto to purchase something? I can go to, HSBC and get a loan there, but that excludes a vast majority of the world. So technology is bettering access of people who were previously entirely outside the system. So that is definitely a positive. And then in terms of, have we learned lessons from the past? History, does not literally repeat itself, but it usually rhymes. So what gets me worried sometimes, not too much yet, but we're slightly heading in that direction, is leverage in the system, which ultimately is what brought upon us the great financial recession, the Great Recession of 2007, 2008, pardon me. And it is this buildup of leverage, which we have to be very careful about. We at Nexo encourage that, because we actually under leverage by, giving just 50 cents on the dollar to our credit lines. We compare that to mortgage lenders in the US in previous years, where they will give you 120% on your house, based on the presumption that the prices of real estate in the US just go up forever. And we found out the hard way that isn't the case. So, have we learned the lesson? For now, yes, but people are quick to forget. So it's good to have this as a reminder that excessive leverage is a dangerous game, and can get us in a whole bunch of trouble. But apart from that, right now, the state of finance, more specifically crypto finances, is a very good place, and really excited about the prospects here.
Great, a nice dose of reality there. So Julian, I'm gonna have the final question go to you. Are you seeing a real change in the lending sector right at the moment?
So just to reflect on Antoni's question about the kind of mortgage lending and through the 2007-2008 crisis and the 120% mortgages, I totally agree. That is a big challenge. And one of the things that's quite good to see is through the kind of COVID-19 crisis last year, the reaction of mortgage lenders to be able to very quickly and with much more agility than we've seen in previous kind of risk areas, manage down that risk and stop offering such high LTV loans. The whole market contracted to kind of 60% LTV, and people really managing that risk on that. Liz, to your question, I think people tend to think about innovation in lending as kind of new products, right? And different collateral and all sorts of kind of things around the edge. And my view is the online lending industry and lending as a whole, is changing very rapidly. But I see innovation kind of driven by things such as growing customer expectations, the new changes in technology that are coming through, and these changes in the actual underlying business models. So the customer expectations who really expect to have these seamless processes, and immediate decision making and things like that, and good value lending, really tends to kind of give us a bit of kind of Darwinian evolution of the industry, rather than kind of funky new products that are kind of just very, very different. Technology capabilities mean that a lot of that stuff can actually happen. The changes with open banking and automation, means that a lot of things there were kind of aspirations for a lot of mortgage lenders and lenders across the group, can actually really be tangibly implemented. And then the innovation in lending models, looking at different pools of capital, emergence of marketplaces, etc., means that by tapping into different pools of capital, we can actually have a much wider set of lending happening than would have happened previously. So I see the real innovation happening in two places. Firstly, in the kind of customer journey, and you look in historically, certainly in the kind of UK market, in the mortgage world, people had to do a lot of paperwork. There was a lot of iterative pieces where people were getting certified passport copies, employment details, bank statements, etc. And a lot of this stuff, while it's still absolutely fundamental for underwriting, can actually just be done in a much more efficient fashion. You can use open banking, you can share accredited documents, you can do all sorts of different things like that to really streamline the customer journey on that. So we're seeing a lot of evolution on that, and that's driven by their expectations. And then the second thing is around data. I think, obviously, you've got the standard data is the new oil, but data for pricing, data for risk, that's fundamental, and that's what people are doing. But there's more and more opportunity I'd see in lending to kind of bring in kind of non-standard data sources as well. And I think, Antoni, raised a good point around, just looking at how are you underwriting these people and how are you making sure you've got appropriate levels of collateral. Bitcoin wealth is a very important piece of people's wealth that historically hasn't been on people's bank statements. And bringing in a wider range of non-standard data sources will really help make lending more get a better overview and kind of hopefully open up the lending market for people that wider than just a credit score basis. So I'd see that data and customer journey are the big innovations in this space at the moment.
Yeah, excellent. I'm definitely going to steal. Innovation is Darwinian evolution rather than just new products. I like that. Julian and Antoni, I just want to really thank you for joining us for this fireside chat, and I want to thank everyone here who spent the day with us at Lending 3.0. If you head over to the interactive sessions, you can pop into our virtual drinks and have a bit of a chin wag on what you saw throughout the day. So I hope to join you there. Thank you, everyone.
Thanks a lot.
Thank you.